Good morning, traders. It is Thursday, the 25th of May, 2017. It's 8:01 a.m. Chicago time, 9:01 Eastern U.S. time. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Let me turn down my news feed here. Very talkative this morning. The overall market stance is uh, pretty decently bullish. The leader today is the Nasdaq, up 23 and a quarter points from yesterday's settlement, 0.41%, followed by the mini Russell, the Dow. The Bund is strong this morning as well, followed by the S&P 500. The Bund's up 47 ticks, the S&P 500 up 6.5. The laggard today is crude oil. Crude oil came off and is trading $50.81, followed by the Japanese yen and the DAX and the US dollar. Those are the four main um, commodities that I track that are negative for today. Uh, so so this is where we stand as far as news is concerned. The Fed announcement yesterday, the FOMC minutes showed that the Fed plans to unwind its massive balance sheet by gradually increasing limits on the dollar amounts of treasuries and other securities that will be allowed to run off into maturity each month rather than renewing. Also, the CBO, which is the Congressional Budget Office, came out and released its score on the healthcare bill, the U.S. healthcare bill, and is confirming that approximately 23 million Americans would be uninsured, and it would make it a lot more difficult for others with pre-existing conditions to get coverage. So that's on the political side. OPEC agrees to extend its cuts to March 2018. That was pretty much in the bag and has already been priced in. This is why now that this is confirmed, you see crude is gapping lower. UK GDP came out overnight. It grew at 0.2% clip in the first quarter um, versus the 0.3% expected. The yuan hits a 2-month high. There's just a lot going on. Of course, Bitcoin again. Bitcoin trades up 10.6% at $2,692. Quite incredible. It has gained 178% so far this year. As far as this morning's releases, we got initial jobless claims 234,000 versus 238, so slightly better. Continuing claims 1.92 million versus 1.93 million, also slightly better. April's preliminary wholesale inventories came in at negative 0.3 versus 0.2, fairly strong. And April advanced goods trade balance came in at negative 67.6 billion versus 64.5. Looking ahead at what's expected for today, um, I'm what's expected for today. Looking for natural gas at 10:30 Eastern. And then other than that, we have Fed Speaker Brainard at 10 today, speaking on a panel discussion on the global economy. And at 1 o'clock, we have ECB Speaker Constancio, and that's what's on deck for today. Let's take a look at what we did yesterday versus what we expected. Here we are. Yesterday's primary hypothesis was for the market to take a responsive push down. It was expected to open right in the value area, right in range. It actually opened slightly higher, so it ended up digging deeper. The primary test yesterday was supposed to be against the prior day's point of control, which was at 23.96 and a quarter. And then from there, the expectation is that the market would turn up and start reaching for that 2404, 2405 area. That was the expectation into yesterday's session. I talked about how it is really prudent for those who are short or swing short or whatever to take a defensive position, given the stance that we're in currently, that the high is likely in jeopardy at this point with the VIX dropping. The range is dropping. The market generally consolidates for quite a bit and then starts pushing through highs with some vigor. And that's really what happened yesterday, and especially overnight. We'll look at that in a moment. The secondary, so that was the primary hypothesis, and it was pretty much dead on. I'll show you in a minute. Just remember, pull back to the point of control and push through into new all-time highs. The secondary hypothesis is we open, we get initiative at first, then we find sellers and we push back to the point of control, diddle around a little bit, and then break through to the lower end of the prior day's range and finish in the middle. So we would get a higher high, higher low, with the market finishing somewhere near where it finished the prior day, in the 23.97 range. This, of course, did not work. It was the opposite hypothesis because it is the second hypothesis. This is what happened. Here we go. Very, very quiet session. The scale, the price scale on my chart is steady. It's stuck at 30 points. I keep it at 30 points. So from top to bottom, it's at 30 points. I don't like a scale that varies. A scale that varies gives the impression that the market is moving. So if I change this to instrument, it would seem like, oh my God, these are huge moves, but actually they're not. So I fix it at 30 points so that I can measure the performance of the market on a day-to-day basis using the same scale. I think it's important. It's almost like an optical illusion when the scale varies. So as you see here, it was very tight. Through most of the afternoon or the morning, we had only 3.5 points. That is in the territory of holiday trading. Um, and then it finally released itself after the FOMC. The FOMC came out at 1 o'clock Central Time, my time, and then we see the market release up to the upside. Look at the test. Here's the test of the point of control. Took forever. It was expected to come down and test pretty early, this point of control, just like I showed you in this instance right here. So we're looking for a test of the point of control early on. It did not happen that way. It took forever to get there. There we are. The point of control tested, and then we pushed through the prior day's high. And as I talked about yesterday, likely to fight here at 2402, aiming for 2403.50 or 2403.75, the measured move there, and it went through by a tick before settling back down. The point of control is inside of the prior day's initial balance, and we had a double distribution profile, but the point of control did not migrate up. So we did most of our trading to the downside, but we do have a double distribution. So that's where we are. Uh, from there, we basically went sideways. We basically went sideways, and then we had an impulsive move, a very strong impulsive move up, and a push to 24.11 and a quarter. You could see the volume was really pretty strong for the overnight session. The overall volume for the overnight session, 204, is higher than what we would expect. It's higher than actually one standard deviation. So we had a move yesterday of about 7 points in one shot. We left a lot of singles throughout through that session. And so since then we have gone sideways. We've retraced a portion of the move up, but we still have some singles back here, right there, a low volume node. So this push here is really interesting. We have yesterday's high basically acting as a stop out point that pushed a lot of trades through. On the heat map, when you look at this, it really was very thin. It was thin, 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 and then at every price we saw 100 lots, 200 lots pushing per price. Normally it takes about 400 to 800 contracts to move price in the ES, but here because it happened in the overnight session. It just carried through pretty good. So that's very, very rough going for the shorts. And then since then we've pulled back to the mid twice. We have a higher low, and it's attempting to create some consolidation of formation to continue higher. But I doubt that that's going to continue. The high is 24.1250. The high is right up against our next measured move. So we've hit this measured move here at 24.0375. We pushed through by a tick. For those of you who have flex levels, have had this measured move on for about 2 weeks now. 24.11 is the next measured move up, and we pushed through to 24.1250 on the overnight session. So coming into today, our expectation, my expectation, there really isn't our, my expectation, look how compressed these ranges are, just incredible. My expectation is an open auction out of range. I'm expecting the market to make an attempt lower. I expect it to leave a gap. I'm looking for it to continue that move higher, push into 24.15 or so, and then come back and retrace in the afternoon and hold somewhere in the middle. So I'm looking for a gap, a small gap zone below as a show of strength. The overnight inventory is mostly long, so I'm looking for it to pull back a little bit before it starts to find a base and continue higher. That's your primary hypothesis, or my primary hypothesis, okay? The secondary hypothesis is if we open and we have initiative buying, I expect that initiative buying to fail uh, early on. We are in new all-time high territory, so the behavior here, there's the potential for an open drive, open test drive. In other words, there's a potential here for a higher time frame or a bigger participants to play because it's new all-time high territory. And then I'm looking for to fail lower high, look for that lower high against size, look to get short, and then aim for the prior day's high. Okay, and then look for it to breach into 2400, 2402, and then bounce back up and finish somewhere in the middle. This is what I'm looking for Hypo 2. I've gone a long time now. Actually, no, I haven't. It's 8:13. So those are the two primary hypotheses. Let's go do Hypo 3 because we're out of balance. Hypo 3 is potentially an open test drive. So what are we looking for in an open test drive? We're looking for a big move, a big rotation early on. So this would give us so the market opens and just gets a drive right away. We're looking for that big rotation early on that tells us it's an open test drive, and then our job is to start to stalk for a long on a pullback, looking for that high to be tested again. So our target on the pullback is the prior high. For me, it's a prior high minus a couple ticks. And then we're looking for a continuation move that eventually will likely fail and come back in, and that would be Hypo 3. Okay. Of course, there's Hypo 4, which is the opposite, and a push higher, and then the initiative move down, in which case your targets become 98.75. The next target becomes 23.96 and a quarter, and then we start to work through on our way down into the prior day's ranges. Notice that the market has been fairly bullish, bad circle here, but Tuesday we hit the point of control to the tick right here, right there. Point of control to the tick. Yesterday, point of control to the tick again, 2 days in a row. The market is just seeing value and wherever the market traded the most the prior day. This is a very bullish sign. And again, this is why I indicated that shorts are likely to be in trouble coming into yesterday's session. So pay attention to these nuances. Yes, the ranges have been compressed, and it's easy for the market to fall through the range because of that. But overall, there's so much compression going on. The volume hasn't been so great, but it's enough to keep driving the market in one direction, and that's what we're seeing now. Okay, I'll leave you with that. Good luck today, and hopefully you're gaining something by watching these every day, that it's worth the effort for you and the time to spend here. Just make sure you're trading your plan. Don't listen to anybody else's plan. It's not their account, it's yours. You have to be confident in what you're doing. Good luck, and I'll talk to you soon. Take care.